Welcome back to our journey through the essential literature of the trading world. If you have ever looked at a stock chart and felt like you were staring at a chaotic jumble of lines, you are not alone. Many traders spend years guessing, hoping, and losing money because they treat the market like a mystery. Today, we are opening the pages of a true heavyweight in the financial library, the Encyclopedia of Chart Patterns by Thomas Bulkowski. This is not just another book on trading. It is the definitive data-backed reference guide that turns subjective guesswork into objective analysis. The footprints of smart money. Imagine for a moment that the market is a snowy field. Every time a large institution, a hedge fund, or a massive player makes a move, they leave footprints in that snow. Thomas Bulkowski tells us that chart patterns are exactly these footprints. When you look at a chart, you are not just looking at random price fluctuations. You are seeing the collective actions of the smart money. If you combine enough of those footprints, you have a trail that you can actually follow. That trail is what we call a chart pattern. By studying these trails, you can start to see where the market has been, and more importantly, where it is likely to go next. Moving beyond anecdotal evidence. What makes this book stand out from the sea of other technical analysis guides is the sheer weight of the data behind it. Bulkowski did not just write down what he felt or what he heard from a mentor. He performed massive, rigorous statistical studies on thousands of chart patterns across decades of market history. He tells us that not all patterns are created equal. Some formations are consistent winners, while others are essentially traps designed to take your money. By relying on his statistical rankings, you stop trading based on what looks nice and start trading based on what historically delivers results. He provides the hard data on failure rates, expected price targets, and the actual probability of a pattern succeeding. The anatomy of a pattern. Bulkowski guides us through the mechanics of identification, teaching us to look for peaks and valleys that define the boundaries of a trade. He categorizes these formations into two primary camps: reversal patterns, which warn you that a trend is running out of gas, and continuation patterns, which signal that the current trend has more fuel in the tank. But he goes further. He introduces the concept of event patterns, which are specific price reactions to corporate news, such as earnings reports or upgrades. He teaches us that even in the face of news, the market follows a predictable psychological script of fear and greed. When you learn to identify these shapes correctly, you are no longer reacting to headlines. You are following the structural reality of the market. Understanding failure and risk. One of the most profound lessons in the book is that failure is not the end of the road. It is a signal. Bulkowski includes entire sections on why patterns fail and how to identify busted patterns. Many traders get discouraged when a setup goes wrong, but he shows us that a failed pattern often provides its own unique trading opportunity. He encourages us to view every trade as a probability, not a certainty. By setting firm stop-loss orders and understanding the historical performance of your chosen pattern, you can manage your risk in a way that keeps you in the game for the long haul. He emphasizes that being a professional trader is not about being right all the time, but about managing your losses so effectively that your wins easily outweigh them. The path to data-driven decisions. The encyclopedia is a massive resource, but Bulkowski recommends using it as a reference to refine your edge. Whether you are a day trader looking for quick scalps or a long-term investor searching for the right entry point, the data is there to support you. He advises us to look for specific confirmations, like high volume on a breakout or a U-shaped volume profile, that suggest a move has real conviction. When you combine these technical filters with his statistical performance rankings, you start to filter out the noise. You stop chasing every single setup and start focusing only on those that offer the highest mathematical edge. This is the transition from gambling to professional, data-driven investing. Building your trading system. Ultimately, Bulkowski teaches us that a chart pattern is just a tool. It is not a crystal ball. Its power comes from how you incorporate it into a broader system of discipline and risk management. He encourages us to practice, to study the patterns, and to understand the historical context of the markets we trade. He reminds us that while the landscape of the market changes, algorithms and high-frequency trading have shifted the game. The core psychology of the human participants remains constant. As long as there is fear and greed, there will be footprints, and as long as there are footprints, you have a trail that you can follow to potential profit.